Welcome to the Boutique Chat podcast, where we're going to help you build a profitable, sustainable business without you having to sacrifice your profitability, your family, or your sanity. Each week, we're going to dive into real conversations with retailers who have been exactly where you are and industry experts so you can learn and know exactly what to do next, all in community over competition. Whether you're just getting started or you're growing past an 8-figure business, you're in the right spot. So let's get into it. Welcome to this week's episode. Hey guys, welcome back to the podcast this week. Let's get a little nerdy, shall we? My favorite accounting nerd, Christyne Gray. I'm so glad that you're here.
And I love how we can take nerd as a compliment in this instance.
Really,
Total compliment.
it's the ultimate compliment in retail, don't you think? Because everyone comes in with, I'm great at buying, and I'm great at customer service, but numbers like freak me out. So I love being able to say that you're a little nerdy. Like, let's dig into the numbers.
Yes, and I love when I have a companion in that space, truthfully.
Oh my gosh. Well, let's jump into it. So if anyone hasn't met you yet, I'm going to have a coughing fit as we get started. If anyone hasn't met you yet, you've been doing this a long time, and you've been a part of the hub a long time. One of my dearest friends in the business. Take me back to the beginning of your accounting journey. How did you decide accounting was your path? And then specifically, how did you get into the boutique world?
Yeah, so I knew accounting was my path in high school, which is crazy, right? Like I really was very solid about that, knew where I wanted to go to college, followed through with my college experience. And then I also learned very quickly that I was an entrepreneurial spirit. So by the time I graduated from college with my accounting degree and business admin and marketing degrees as well, so I kind of like topped them all off because it was just a few more classes to take, right? I knew that I was entrepreneurial. And so it didn't take me long to start my own business. And when I started my own business, this is like a really big flashback. It was actually called Bookkeeping Solutions Plus. And the plus was because to make a living, I had to do admin work, right? So I did all things bookkeeping. I'm fresh out of college. And so you're still new. You're still translating textbook accounting into actual comprehensive operational accounting. I knew that I wanted to really be connected to the business owners that I worked with. And that was hard to come by, to be honest with you, because traditional accounting and general accounting was just the way you did it. Back in the day, we didn't have the technologies. We didn't, you had to be local, all the things. And so, yeah, when I started my business, it was Bookkeeping Solutions Plus. And then once I decided that I was graduated in my knowledge, I changed the name over to Balance Your Books. And that was a big, big move relative to marketing and networking because I felt like it spoke more about what we were doing in our business. We grew that business to change the name again to, as Balance Your Books, to Profit Hub 360. And again, that was where we started doing more advisory work. The Profit Hub concept, like we've got to talk about profit. We're going to do advisory. We're going to get you as a business owner to understand your financials and your tax returns and tax strategies and all the things that we'll likely get into here today. But then I quickly realized that I had created a monster. And which so many of us in this industry alone get to that point of our lives and our careers. I had created a monster. We were 7 different industries. I knew my passion was the women-led industries. And in 2013, I started, so this was 1997 that I started my business. 2013, 7+ employees, rented office space. Like I just felt like the business was sucking the life out of me. I started transitioning to step out, to exit. So I started working on my exit strategy, which is a lot of the conversations we have as well with those higher level clients. And my exit strategy out of that business took me about 2 years. And don't get me wrong, it wasn't an exit strategy out of my industry. I love accounting. I love income tax. I love advisory work. It was out of the monster that I created. I knew I had something to sell and I knew I wanted to work with women entrepreneurs. I loved my client base that was growing rapidly in the boutique and retail industry. At that time, I had some spas and salons mixed in there to a very large level, actually. And I just knew that it just had to be that was where I was focused. And the reason being was I knew that I could create a ton of impact if I just focused on one industry. We've talked about this as well, like really niched down, became expert at every area of that industry, which again happened to be retail in its current format, independent, boutique, women-owned retail businesses is really truly are the bulk of our business. But I'm boots on the ground. In that exit strategy, I ended up selling that business to two of the owners or two of my employees. They took over all of the other segments in the book of business, which was a beautiful strategy. I spun off my retail clients into what is now She Profits Now, and I started really working hard at what you see today as She Profits Now, where we were building out full-on advisory packages, CFO level, fractional CFO outsourcing, frameworks for decision making, data driven education, like all the things that you are witnessing now was a spin-off. And honestly, like that's when I found the boutique hub is going, okay, I am so close to the exit. The exit was planned and we just needed to do that handoff. And I landed in your space. And it really, I mean, Ashley, what you have done in your business and the community you've built has done for my business, I would have never imagined being able to do in this timeline on my own, right? Like we went nationwide because of the boutique hub versus just regional. And yeah, it's just been a beautiful, beautiful thing. And of course, getting me in front of the community to fully understand what not only my regional boutique owners needed, but nationwide, where are the differences between different demographics and different industry, specialties and such. So that's how it all started. And that's where it landed where it is today. And that's where it is all inclusive now versus just accounting and tax, where my roots are degree wise. Yeah. So just evolution at its finest, I guess.
Love it. It's such a perfect fit. You're the best dressed accountant I know. Of course, you landed in the boutique space.
I'm always in their stores. Pretty easy to take them on as clients, right?
I know, right? No, honestly, it's been one of my absolute favorite partnerships because it's such a critical piece of the business that's often so, it strikes fear in the hearts of a lot of people because they just feel like, gosh, I don't know what I don't know. It feels a little overwhelming. It's just so critical, but at the same time, I don't know what's happened to a lot of people. If people had like a negative experience, you and I've talked about this. If a lot of people have had a negative experience growing up with math or an accounting teacher or an algebra teacher, and then all of a sudden they tell themselves this story that I'm not good at numbers or I don't understand numbers, and it becomes a belief system they carry into entrepreneurship. And like I said, like a lot of entrepreneurs come into the boutique hub, retailers, and they're like, hey, I'm great at this side of the business, but this other side is a little too much for me. And I think the thing that you do better than anyone is you just break it down and make it simple, and you let the numbers tell a story, and it becomes a game, truly. And I think that's why business is fun, right? Like when business becomes a game, it's a lot more fun to dig into the good times and the bad, and you make numbers more of a game. Would you agree? Like it's a huge misconception for clients that you see?
Yeah, very much so. Because my perspective of numbers, especially in this industry, and maybe I can lean in this direction because I do feel like I'm somewhat of a creative as well as an analytic. And so I look at numbers to say, yeah, and the reason why I'm so passionate about the creative entrepreneur and working with the creative is because numbers and your dollars that pass through your business, in and out of your business, you can get so creative legally with what you are doing with that cash flow. And all it is you just have to apply your vision to how the numbers are flowing through your business. It's as simple as that. To just go, no, I'm going to capture this business because I am a woman warrior, right? Like, or I'm going to capture these dollars and I'm going to make this vision come to fruition because I am this woman warrior, entrepreneur. Just apply the dollars to where they need to be. That it's as simple as that. It doesn't have to be scary. It doesn't have to feel burdensome. It can be freeing. But when you add your creativity, your creative energy to what you are using those dollars for, that's where to me the fun really hits. Yeah.
It becomes a game versus something you're scared of. And for you guys listening, we obviously record this a little bit in advance, but recently you did join us at a mastermind event and specifically talked about that strategy of so many of you guys listening, retailers, you have a lifestyle business. You do lots of different things besides just sell products through your boutique or retail store. And so we talked about how to make a tax efficient lifestyle business that pays you more than one revenue stream to do what you're doing. So I want to set the tone that like that's the goal, like that's where we want to get everybody. But I think for today's conversation, I really want to hone in on the details of what are the basics, what are the essentials to getting started and making sure that, yes, you're ready for tax season, but just you have a sound, healthy bookkeeping process in your business. What do you do if you're stuck in your business or you just need the next idea to grow to the next level? Well, for me, it's get out of my four walls. I want to invite you to join me at the Retail Summit, August 16th and 17th in Dallas, Texas. We're going to have the stage filled with guest experts, over 20 of them, not only teaching, but helping you implement the latest tools and strategies to grow your business right now in 2026. So come join us, network, meet amazing retailers just like you, and learn the latest strategies driving your business forward. I'll see you in Dallas at the Retail Summit.
So where do people come in? Where do you feel like the most common mistakes that you find right off the bat happen to be?
Yeah. So, I mean, the ultimate goal definitely is that we can write off our life, right? Write off our lifestyle to its highest level. And with that, you've got to understand where your dollars are going. Like where are you bringing money into your business? What different revenue segments, if you want to call it that, or revenue sources, as well as where other opportunities are, because you're already living in that space of revenue opportunity as as a influencer or whatever it is you've got to really truly fully understand what those channels look like, what those revenue streams look like, but then fully understand where that money is going. And the way I always look at it, Ashley, I mean, QuickBooks, if we were to go to a baseline, like, how do I do that? QuickBooks Online, it is such a beautiful tool. It is actually very easy to use if you spend the time training on it, right? You just have to, there's just rules within it, no different than any other software. If you can learn Shopify and you can learn Lightspeed or any other point of sale that you're using, those are far more complex than QuickBooks, truthfully, because it's just systems and processes. And so that will give you the opportunity to at least extract the information that you need to fully understand exactly where the dollars that come into your business, where they're flowing out. And one of the things that we always really highlight relative to financial statements, and when you hear, okay, financial statements, and how do I read an income statement and a balance sheet and a cash flow statement? That sounds very intimidating. I get that. And I totally understand and empathize with the intimidation part of it. But if you actually look at those financials and say, all right, if I break it down into chunks, into little segments, I've got one whole business that I've got to fully understand how it is performing financially. Where is my money going? The where's my money going formula from Retail Bootcamp, right? Like, we all lean in on that. And if you just take that, where is my money going, and you drop it into segments, so this would be an organizational tool almost in your accounting system, which is actually how we produce our income statement and financial statements, is we segment where you're making the decisions so you can see the whole number in that one segment. So my example there is, I want to see exactly on your financials true cost of sales, not purchases, but true cost of sales plus freight out plus freight in. That is your cost of receiving and having that product land in your store, as well as the cost of getting it to your customer. And it has its own relationship with your revenue. So you're making decisions just on cost of goods sold. You're segmenting. Then you're coming in and you're making decisions just on compensation. Your wages, your officer salary, your payroll taxes, any employee benefits. What is that data, just that data alone in that segment, telling you about your business? And you do the same for occupancy, for your rent expense and your, brick and mortar and your space. You do the same for admin and operating, and the same for selling expenses, which is your advertising, your point of sale, like that forward-facing customer experience and customer acquisition and engagement. And when you are able to just look at your dollars and say, I'm going to lump sum, like I'm just going to group them and segment them like that, all of a sudden the decisions don't seem so difficult. You just have to make decisions on, where's my payroll money going? Am I spending too much on payroll? And you don't worry about every other area, which, not to push us into another segue, but that's literally where Profit First in our 40-20-40 cash flow strategy comes from, is we just want to put the money where the plan is. And we've got to know where you're coming from, looking back, to plan forward, right? I maybe went a little deep there, but you have to have organized retail-specific financial statements to understand that information. But once they're organized, you will actually start to see the data behind every decision you make in your business. And then the decisions become more clear and more confident.
So much more confident. Once you know the rules of the game and the boundary, you're so much more free to play within that space. But if you don't know what the rules are and you don't know what the boundary is, you kind of are playing in fear and you're playing small.
Yeah.
So I think it's one of the most empowered decisions you can make, is to really understand your numbers and financials. I'll get to Profit First in just a minute, but I think, again, like you said, before we get there, we've got to live in the QuickBooks world for just a minute longer. If you're listening and you aren't using QuickBooks, QuickBooks Online is like, what, starts at $20 a month. It's very easy to get on board with. But like you mentioned, we have to know where's all the money coming in, and it syncs with Shopify. So all the money coming in can flow into QuickBooks automatically. But then the expenses, as you mentioned, this is something we teach in Retail Bootcamp is where is my money going? So you may look at expenses as, oh, I've got, all these different things that I'm paying out, subscriptions and apps and memberships I'm a part of and shipping and supplies. But to your point, it's really segments. And that's that where does my money go formula. So when you break it down by industry standard is that I pay myself this much, I pay rent in this percentage. Now you can start to really look at, okay, here's where I'm falling. Here's where there's an opportunity to be better and become more profitable so that I can use profit first and pay myself a little bit more and more often, right?
Yeah. And the whole goal there, like the ultimate goal is that you are protecting profit. And so if you come in and you just say, I'm going to for sure protect 10% profit, and I'm then going to lean into 40% overall operating expenses, but you chunk it down into those segments to say how much of that 40% are you going to allow yourself to spend in each segment. So we don't even use the term budgeting here at She Profits Now. And the reason being it's very restrictive, it's very confining, it's constraints. You're right, like we run from it as creatives. And so we always just say it's your budgeting allowance, or not your budgeting, it's your spending allowance. Once you protect your profit, you pay your debts, you pay your taxes. What's your spending allowance to run your business? And we take that 40% that we recommend and then we break it down so that you are looking at it in smaller pieces and making decisions in smaller pieces. Because then the big decision isn't so overwhelming.
Yeah, that's so true. One more basic kind of habit or understanding that if someone's new that's listening, I want to make sure that this also drives home too is making sure people are set up correctly from the start with having a business specific checking and banking just plan, however many accounts you're going to have. We'll get into it in a minute. But then also what expenses should be run through the company credit card and kind of tools of the trade. Why would you use a credit card or a line of credit versus I'm just going to take out Shopify Capital and pay for all these random things with Shopify Capital. Can you give me like the basics of let's make sure we're protecting where the money is coming in and out in what accounts?
Yes, absolutely. So the whole concept here with your banking accounts is yes, number one, do not mix personal with business. If you were audited, for example, and you're mixing personal with business, the IRS can throw any entity structure that you've set up, let's say an S corporation, they can disallow it and self-employment tax everything. All that tax strategy that you've put into place just by you not following the rules of personal versus business can be thrown out, negated, and you're back to square one with paying more taxes than you intended to pay. So like those are the rules of the game that we have to follow as being business owners. And but when it comes to the actual banking and that flow of the money of your revenue is I do, again, do not intermingle personal. You pay yourself in a wage or a distribution of profits by transferring money from your business bank account to your personal bank account. And it's just one clean transaction. And then you spend that money in your household on your personal, never let it flow into your business. By doing that, you're not only following entrepreneurial and business entity laws and rules, you're also creating a clearer picture for your business by not intermingling stuff that shouldn't be there, spends that shouldn't be there. And you're going to save on accounting fees too for paid bookkeepers, because why would you pay me to record your personal transactions and decipher what's what, right? Like it's very, disorganization is going to cost you money in the end as well. But the bank accounts that we want you to set up is like, if I were to just paint the picture, or if I were to like set it all up for you and just say, this is going to get you to the best foot forward on your business and allow you to grow in the same system without always having to take 2 steps forward, 10 steps back, is that you would come in and you would have a deposit bank account. And that deposit bank account does not have any transactions coming out of it. You don't spend money out of it. You only use it as a landing space for your revenue sources. Then from there, when we get you savvy enough, because you all will get savvy by listening to this podcast, right? Is when we get you savvy enough on money and cash flow management, you will understand how much percentage-wise you should pull from that deposit income bank account into that segmented bank accounts that we just talked about. So if the perfect setup would be that you have your landing bank account, which is your income, you have an inventory bank account. That inventory bank account should have its own credit card assigned to it, where you only buy inventory on one credit card. And the ideal would be that that credit card never has more money charged on it than what you have in the bank account. That is going to keep you out of Shopify Capital debt in the future. It will also keep you out of inventory debt, and it will keep you obedient around and disciplined around your inventory plan, because we also need you to have an inventory buy to sell plan. So a third bank account would be sales tax. Sorry, I should have said sales tax right away. Sales tax is not your money. Like immediately your sales tax money, what you collected in sales tax, it shows up on your point of sale reports. That should be pulled out of your deposit bank account and put into a sales tax bank account that you then pay your sales tax reports out of.
How often do you do that transfer? How often?
We always advise, like Profit First book says the 10th and the 25th, if you read the Profit First book and you're leading into that methodology, but we advise weekly. I love a Monday morning coffee date with my numbers, and you transfer weekly because the spending rhythm is different in retail. We're buying inventory likely weekly, at least they're charging weekly. So I like the weekly rhythm. It gives us the opportunity, that weekly rhythm, to also double check and make sure all of our tenders from our point of sale receipts, the money that you collected in different formats, Shop Pay, right? Like PayPal, your merchant account, that we actually get all that money as a good checks and balance. So there's some checks and balances that we want you to put into play as well. But yeah, so we've got the deposit bank account, we've got the income bank or the inventory bank account, we've got the sales tax bank account. Then we have our clients allocate to a profit tax and owner's pay bank account. That's one bank account, but it has three purposes: profit tax and owner's pay. And then the last one would be operating expense. Okay. So it sounds very complex when you're going, okay, I'm taking one bank account and I'm going to 5 bank accounts. But here's the thing is, again, it goes to that segmented thinking, that segmented decision making, going, I know this about my compensation or my operating expenses. I know this, and I know I have this amount of money to spend. How do I make good decisions on only this amount of money? Same with inventory. It creates the guardrails. Like you said, it creates, and it allows your inventory money not to bleed into operating expense. Because nothing is more disheartening when we read the posts about, I don't have any money to buy inventory. But that's the lifeblood of your business. We've got to protect that, right? And so there's many purposes behind it. Should I lead into the profit tax and owner's pay? Yep. Okay, so the profit tax and owner's pay, we do this much different than the writings of Profit First. And trust it, you guys, Mike McAllowitz, all things Profit First, the entire Profit First professionals community, they know how I do this and they approve, right? Like I've been licensed with them. I had been for so many years. So please know that this is all very legit, as well as put into play it's specific to our industry.
It's proven, yeah.
It's proven, yeah. So the profit tax and owner's pay, here's what does not work in the standardized Profit First formula, is that when we as retailers just put 20%, for example, into a tax bucket, that is money that we don't even know that we're going to owe that in tax, and it's tied up, and we're not flipping it into inventory and turning it into return on investment and additional profit. And so the way, as a tax accountant, I take a different perspective on it. I look at it to say, you pull your profit. So if your financials, your income statement, your profit and loss statement shows you $10,000 profit, I want you to pull $10,000 into your profit tax and owner's pay. And then you know that if your effective tax rate on your tax return is 20%, you need to now take that $10,000 in your profit tax and owner's pay account and pull 20% of it into a subsidiary account, like a vault, of $2,000 for taxes. And then that tells you, okay, now I've got $8,000 left. That's my owner's pay and my profit reserves. Now you know how much of that you can take. Maybe it's 50% and you leave some reserves in there. So it allows you to say, this is profit. I'm protecting it. Now I've got to pay my taxes on it specific to my own tax circumstances. Yes, I'm going to try to apply tax strategy and save money there, but at least I first protected it, the money, and then you pay yourself whatever you can out of it and you build reserves. Yeah.
I love that. All right.
Yeah. That profit tax and owner's pay is what's needed also to pay debts. Just so you know, that question will always come up, is where do I pay my debts? You pay it out of your profit tax and owner's pay. You have to have profit in order to pay debt. Yeah.
That was going to be my next question, is just the need of, I love how you mentioned, the inventory account, the inventory credit card, and that's where we're spending. Can you talk about maybe dangers of, Shopify Capital, PayPal Capital, people just getting upside down, or even terms? I've seen people get upside down with terms and not be able to pay them back. What's your opinion on all of that, and where to use debt efficiently?
Yeah. So debt is designed to leverage growth and scalability, right? Like that's the whole concept of debt, is that we're bringing on working capital to leverage an opportunity that we have in front of us. And that opportunity should be, we're entrepreneurs, we should be calculated with what that opportunity can bring to our business portfolio or our household portfolio. If you were to think about just that's life. So debt in our business should never be used to repair a leaky hole, a leaky bucket, right? Like if you're bringing money in and it's pushing out the back door as quick as you bring it in, there's something broken in your business. And as easy as it is to just swipe that Shopify Capital loan and say, I'll figure it out later. If you haven't figured it out yet, you're not going to figure it out later. And that Shopify Capital loan will be, it's so too many instances, it's the demise of a company. It might be the third or fourth capital loan that actually creates the final breaking point of the company. But here's what happens is, if you couldn't afford your bills before the capital loan, you certainly can't afford 10 to 14% of your daily deposits to go back to the capital loan. It's too aggressive of a payoff. So the statistics are that if we have debt or if we're behind on our bills, it's going to take us 7 times longer to pay that money back than it did to accrue the debt. Right. And so like there's that statistic out there. And so if you look at it to say, okay, 10% of all of my sales going to pay back my debt in that Shopify Capital loan because I took that loan and now they're taking my deposits first, it's way too aggressive, way too aggressive. And in the meantime, we haven't fixed the problem. So now we're compounding it, right? Like 10% of our deposits are going to Shopify Capital, but we haven't fixed the leaky bucket. And so it's still leaking. And now it's 2 issues that we're dealing with in our company, not just we have one expense problem. Right? So if you can't afford your bills, you have an expense problem or a margin problem with your inventory, and you've got to first address those 2 areas.
That's a whole nother level of conversation. I love this. This is where we get so nerdy because it's so fun. It is often an initial markup. Am I charging enough for my inventory? Do I have the right amount of inventory on hand in the right categories? So assortment planning. And then third, do I have a markdown strategy? Like, am I actively taking markdowns so that I can get the cash back out of inventory that's a dog, that's not working for me in said period of time, so that I can reinvest it back into something that's fresh and new? So do you feel like that's also something maybe mindset wise, or just the comprehension of there's cash flow and managing income and expenses, but then there's inventory management, which is kind of a whole nother level of standards and reports?
Right, exactly. Because your inventory management is you're managing the asset that you require a return on investment. So you've got to be the smartest that you can with those dollars, because you only have so much money to spend on inventory. So the one thing that I do, like when we're coaching clients, we will start to put limits on the inventory bucket to say, okay, we alone as the professionals can calculate the power behind any given level of inventory that you keep. Because we want to force good margins. We want to force minimal discounting. We want to make sure that you're buying smarter, like you said, in your assortment planning. And so if we put limits on the inventory buying number, the dollars that you can spend, which is what the bank account does, it puts the guardrails, you will make smarter decisions because you don't have a free flow of cash flow to just willy-nilly go to market and just spend anything. And you will make better decisions on your markup strategy as well as how much you are bringing in. Relative to inventory is we do take a bottoms up approach to our inventory planning. And what that means is we're coming in to say, what is your logical and realistic revenue goals? What can you logically in your business achieve for revenue with where you're at today? Doesn't mean you can't get to that big kahuna number in a year or 2 from now, but are you there today? And we calculate it based on average order value, new customers, returning customers, right? And how often a returning customer recurs, their loyalty. It's a formula. It's a compounding formula. You change one, the whole revenue dollar changes. Once we can zoom into what that logical and realistic revenue is, that bottom up, then we know exactly how much to spend on inventory. That's where we create the guardrail on the inventory, because we know exactly where you need to be to have a healthy turn, healthy margins in each assortment, all the way down to wide versus deep. How many styles do we need to bring in for our collection planning? All we got to do is nail and get as close to our revenue potential as possible and not come in with the mindset. So talk about mindset. I do believe a big misconception is if we have the inventory, we can make the sale. But if we don't have the customers, we can't make the sale. If the customers aren't returning, we can't make the sale. If our average order value went from 108 to 92 any given month, why? We didn't make the revenue. We've got to address first the revenue itself, bottoms up. Yeah. So inventory, I could go on and on and on about that because it is the cash flow constraints. And then of course, protecting our revenue dollars. You've got to, once you invest in your revenue, let's say you've got $50,000 today or in your inventory. I mean, if you've got $50,000 today in inventory, I want you to always be putting that cost of sale back into your inventory bucket. So you never go lower than 50, whether it be inventory on your shelf or money to invest for high season. It's sitting there reserved, right? Like you might only need 30 of it in inventory in like June, July, but we know you're going to need 50 coming into fall. That's how we protect you from terms too. And from credit card debt on inventory is we look at the plan for 12 months. What's the highest level of inventory you need? And we start to build your inventory spending bucket and your inventory reserve bucket. And then we just protect that money at all costs. Yeah.
I think that's critical because I think it's easy when you're starting out to say, oh, the money's there, I'll just spend it. Like, oh yeah, whatever's there, I'll just spend it. But really, I mean, there's just so many variables and fluctuations and seasonality and all the things we could go into with inventory management. What I really wanted to get to today is, I mean, these are really the basics of understanding, again, cash flow versus inventory, the basics of bookkeeping. So QuickBooks, the bank accounts, just understanding where the dollars and how they flow, how that all works. But I really want everyone to also walk away today with tax preparation and planning, right? As you guys are listening to this, like that tax deadline's looming, it may set fear into the hearts of people because as entrepreneurs, how many times have we witnessed people say, I worked so hard all year. I brought in all this money. I have this, sales number that I chased so hard, but all of a sudden I get to this date or I'm setting up my quarterlies. I go to pay my quarterlies and boom, there's no money in my account. So talk me through the basics of making sure I am prepared to start paying taxes or to file my taxes and be set up to pay quarterlies going forward.
Yeah. So there's different segments of this as well. So to be prepared, number one, you just have to be really organized. Like number one, be organized with not only your receipts and all the things like that's back office. Okay. Easy peasy. Just put it in a monthly folder. I don't care. Just so you can reference it later. Save all of your receipts. We tend to get away from that in our technology world these days. But then as simple as you really truly need to have an organized way, the QuickBooks system. So you have financials. You've got to understand not only operationally what you are profiting every single month so that you can understand your tax burden at the end of the year throughout the year. So our approach and our conversations are always that tax is not an end of the year responsibility to you and your business. Tax is an every single month responsibility for you and your business. And without financial statements that are I always look at, say, financial statements also, your bookkeeping is telling you your financial health in every area of your business. Your bookkeeping is telling you that those financial statements, you must get them every single month. Whatever you need to do not, that's just no matter what. Those financial statements need to have two different driving factors behind them. Yes, they need to be retail specific, very organized retail specific, but the reason for that is you've got to be able to use them for management purposes. Use your financials every single month to manage your business efficiently, financially, but also use them to predict your taxability and your tax circumstances. So we always say we've got financials are management reporting and tax reporting, and they need to be in a format that gives you the information on both, right? And so that's where a lot of times we'll take, I'm not going to go there, owner's discretionary spending. It's like, that's really out there, right? Don't go there, right? So step number one, that QuickBooks, those financial statements, definitely. Then for you should fully understand what your tax bracket is, right? Like your effective tax rate. It's as easy as going to your last tax return, taking what your tax liability line item was, dividing it into your adjusted gross income on your tax return. What is that percentage? That tells you what both federal and state, that tells you what your effective tax rate is. So every dollar of profit on your financials, you need to apply that effective tax rate and know that you're going to owe that money in taxes. Unless, of course, you come in with a good tax strategy, savings, but you have to have cash flow for it, right? So number one, know what your tax liability is leading to be. Save the money and set it aside every single month. That's just part of your cash flow protection plan, those buckets that we talked about. And then from there, work on tax saving strategies, educate yourself. We do a ton of education on writing off your life, right? Like just how do you write off your life in this industry? It's actually pretty easy to write off a lot of it, truly, as women entrepreneurs and influencers and creatives. Knowing where your opportunities are to save on tax, and just know that without setting that money aside to pay the taxes, you aren't going to have money to decrease your taxes, because in order to apply a tax saving strategy, you have to have money to invest into that tax saving strategy, right? As well as capture some of the stuff that you maybe are spending anyway, and you just aren't aware that you can write it off. Obviously, that goes without saying. But it's just about being organized on a daily level, on a monthly level, and making sure that you have all eyes on what tax opportunities you have for the different layers of your business and your household life.
I want to dig.
Yeah.
I want to dig into what you said for a second, because a lot of times we'll hear people say, "Oh, I didn't know that was a write-off." And I want to talk about this just for a second. There are business expenses, right? The things you're paying every single month, and like they're coming out of your business account, and you know they're a business expense. But then there are other things that you're like, "Oh yeah, I guess it could be considered a business expense that I could deduct on my taxes." I may not have been throughout the year taking it out of one of my business accounts, one of my business bank accounts, right? What are some of those common things that are write-offs that people aren't always aware of? That really and should they be coming out of their business account if they had been coming out of their personal, if that makes sense?
Yes, it absolutely does. So the best thing that you can do today, when you're hearing this, right? So if you haven't filed your tax return, you can always look back and clean up, but definitely for a forward thinking rhythm and system in your business, is the way I always coach it. And we just talked about this in the mastermind, right? Is if you start to think through every spend that you do in your business and in your household and throughout your daily just movement in life, is think through to yourself, is with this spend, does it give me the opportunity to produce revenue in the life that I live through my business? Does it give me the opportunity to produce revenue? That's like key number one. And if that spend gives you the opportunity to produce revenue, does the spend benefit the business or the revenue source more than it does you personally? So any tax deduction has to benefit the business or the potential for revenue more than it does the spender's personal gain, right? So when us women, we always think about the beauty side of it, right? Do the hair extensions really give us the opportunity to produce more revenue? Then it does benefit us personally, right? Like you've got to be honest with yourself. Maybe you could put a spin though on your branding to make that all work out. So I do believe that when you apply those two questions to yourself and you apply it to every spend that you are making, that you might come up with some really creative revenue streams and lifestyle elements to your current business that can allow it in the future to be an expense. So this is where money actually does get fun and creative, where it's not black and white. There's some gray lines definitely for tax, and we just have to get creative with it, but we have to follow through on the meaning of the revenue behind the spend.
So interesting. So let's layer this into two lifestyles of people we know, and we won't mention them by name, but you can use me. You can use like rodeo and horses, or we have a mutual friend and client that's into racing. So two lifestyles that our families enjoy. How would you apply this principle to those lifestyles and build tax efficiency into the lifestyle we want to live?
Yeah. So I'm going to go with the one that we are like, not the race one, but the other one, because I believe that that's actually a few other layers that I feel like I could work in to give a broader example. Because it's in play, right? So we've got a very successful boutique that does live selling from a few different locations and uses those locations as really truly not only their props, but demonstrative of their lifestyle and how they utilize the product that they're live selling, and really just getting, and their entire family is involved in this business, right? So they're definitely, this live selling, just retail is in and of itself allowing for opportunities in areas that you wouldn't traditionally think are tax deductible, whether it be, that pool, that background. I mean, you can use a tissue bin possibly, right? Like if you're using swimwear, if you're bringing in towels, if you're bringing on, right? Like what can you bring into your business? That was kind of random off. Yeah. But the same one is, so number one is, where are you utilizing your own personal space to promote your brand as a retailer? And who's involved in that, and what's the lifestyle behind it, and is it part of your brand story that or it creates a magnet, right? Like people draw to this individual, she's magnetic, and it's because of her lifestyle that they do that, and then they buy from her consistently, and she's growing. Added to that, she is now manufacturing product for her own as her own brand, for her own boutique. That in and of itself is another lifestyle business that we can add on additional tax deductions that wouldn't be relevant to her retail environment. And then from there, the fact that she is in the rodeo in the Western community, her lifestyle behind that rodeo and Western community becomes part of her brand and part of her influence to her customers. So we get deduction opportunities there. And so it's really just looking at, where in my life am I drawing people towards my business and my ability to produce revenue? Where am I influencing? What am I spending to influence and to create that brand and that influence? Yeah. And when you start to just drill deep, you start to find deductions. And when we get to go another layer to this, Ashley, is some of the very high level tax strategy sessions that I have. We're looking at the vision board, right? Like we've got profit and we've got a vision board of what we want for our families and our lifestyle. And we're bringing on that vision board, right? Like I've got one client that just bought a gas station and is in the process of turning it into a coffee shop. And like, because that's the profit, and they want to build on their brand, and it fits very well to their brand. They also have cattle. They're selling beef. They bought land and are renting out that land. And so they're, and it's literally where they live. And that applies a lot to what you've got going on too with your own, household or your own property.
Mm-hmm. Yeah.
Well,
property becomes a whole nother level of it, and acreage becomes, we love investing in land. That becomes a whole nother part of it, because then what can you do? What revenue do you build off that land? So we have hunting land, right? But so many acres of that hunting land are tillable acres. So we rent those acres to a farmer, but then that allows a whole nother series of write-offs for us for the farming piece of the income, for the hunting piece of the income, if we're going to lease out hunting rights on that property. Now we're looking at like four-wheelers and camping and like all the different things, because that's what it takes to manage that property. So basically all of the, I'll say, toys that many of us want in our personal lives, they're all business assets and tools. My living quarters horse trailer is a business asset that we own. Like all of it can become a part of your lifestyle. I'm curious your thoughts on this. I see a lot of big retailers and wholesale brands and manufacturers as well, doing on-location photo shoots for their upcoming line. They're going to Mexico. They're live selling from Mexico. They're doing, bringing their models and their team. They're doing photo shoots. I mean, vacations also can become a piece of this. You're using them for that purpose.
Very much so. Yes. We all, if you look at just like status quo with our old traditional accountants, I'm not going to say it out loud, right? Like they're going to say, you can do your board meeting. Can I say it? Yeah. So
yes, please say it, because it's real.
It's real. So how I always refer to this when I talk about traditional tax accountant conversations is, did you hear this from your old stale pale male accountant? Or did you hear it from an industry-specific accountant that fully understands your lifestyle, your brand, how you produce your revenue, the life that you live through your brand? Like, it makes a big difference, right? And I know we wanted to chat about who you hire for your accountant makes a huge. And I'm going to say all day long, your bookkeeper needs to be your tax accounting firm, because there's got to be a solid collaboration between the two, right? Like bookkeeping isn't just recording transactions. It shouldn't be. You got to transition it and allow it to be the accounting side of it, which is a higher level of application. And your bookkeeping has got to reflect your tax circumstances. It cannot be separate. But to go to the conversation of write-offs and what's allowed and what's not, is you just have to have someone that can join in on that creative journey with you to say, here's what I am using my money for, and is there an opportunity here to create an actual legitimate business? And travel being what part of our business and our industry, we do travel. The old stale pale mill accountant will just say, well, if you do your board meeting, you and your husband might be able to go and write off 1 day of your 7-day trip, as long as you can document that you did your board meeting. Well, it goes deeper than that. We're doing, like you said, photography. We're doing lifestyle shoots. We're on social media constantly. We're promoting who we are as people. We're bringing, that know, like, trust. That creates an opportunity to write far more off, and likely most of a trip off. And especially if you have your team all day long. If it's not just you and your hubby, you and your spouse or your companion, if you have your team all day long, that is a write-off. We've got clients who are buying homes on 30A and using them as part of their branding position. And guess what? Yep. And then they're, short-term rental, applying the Augusta rule. Like, there's a lot of tax strategies that go into something that you love yourself that can be part of your just vacation family portfolio, but you've taken tax benefit out of it. Just by getting creative with, what does revenue opportunity look like?
Just love this conversation so much. This is where the creative brain is just like,
help you spend money.
Ideas. I mean, you have to make the money, right? Like, you gotta have the product, you gotta have the traffic, you gotta be able to sell the things to make the money, but you can be creative with whatever level of income you've built for yourself in your business. And no offense, I know I'm going to get messages about gray, pale, stale male accountants. There's many great ones out there, right? I'm not going to write everybody off, but I think it's really true. And I've lived this, I've had this experience myself personally, so I can totally attest to this. Mine happened to be a woman. It was an elderly woman who's now retired, but it was just very transactional when we first started to work with her. Like, once a year, boom, this is what we do. When we left her business and went to the accountant that we have now, who is so creative, he was more like a coach and a counselor to us. Like, we meet all the time with him, and several times throughout the year, he's checking in on, what's your position? How are we doing? Where's the revenue coming from? What are we going to do creatively, like, to make this optimized come tax season? So to me, like, that's what you want to hire. This is not just, especially in retail, you're not just going to H&R Block and filing this. Because can you please touch on this? There's very few accountants that understand retail and inventory position and what to do with inventory at the end of the year. So how can those who are listening best set themselves up for success with their inventory, specifically going into tax season?
Yeah. So the very first is the myth of the fact that the inventory that you hold as an asset on your floor space, in your back room, your inventory asset, the myth is that it is taxed at year end. It is not. Assets are not taxed at year end. Your profit is taxed at year end. So I do want to just remove the myth and just say, please do not sell perfectly viable, revenue generating, profit potential inventory before December 31st. You need that inventory January 1st. And the first part of January. Do not, because all you're doing, you're not saving any taxes. You've been maybe told that. You're not saving taxes. All you're doing is you're literally sacrificing the profit you worked so hard in fourth quarter to earn. You're sacrificing it. And then you're going and having to administratively go and buy new inventory to sell it. But in the meantime, you've consumed your buyer's budget on discounted product. That's perfectly good, that you could have sold them in the beginning of January. So that goes, like, that's first number one, is only sell down. Like, definitely get rid of. So tax strategy number one is, do make sure that you try to get rid of the dead inventory. Anything that is dead, aged out, whatever it is. If you can possibly sell it when you have your fourth quarter eyes on your products, sell it, right? Get what you can out of it, get the cash flow back in. But then there's a strategy going beyond that where we can, I want to call it like almost like split the calendar, right? Like split the calendar dates and say, let's just put you in a scenario where you want to have a full-on warehouse discounting sale, and you normally do it in February. That's your timeline. I'm going to do it in February. It's change of seasons, clear out old inventory, get ready for spring and summer to come on. What you can do is you can write down your inventory. So if you have, the last week of December, you have aged and distressed inventory that you want to give one last chance on a sale for, you can actually write down the cost of that inventory and take a deduction for the lost value of it. So think of it as that product has depreciated. It has lost value in the eyes of your customer. If you were to go buy that exact same product in the moment, you would maybe pay less at the vendors for it because they're trying to discount it and clear it out as well. And so what you can do is just bringing the cost value in your point of sale system down to what the market value is for it at cost. Try to keep your same markup applied to what your retail would be when you sell it in your clearance out sale in January and February. And so that write down process is if we apply that same markup rule, we talked about this yesterday in Mastermind too, is if you apply the same rule, what you're doing is if it's a $20 cost product and it's retailing for $60 full price, like when you first bought it, that's a 3-time markup. But you are looking at it to say, this is going to go on a $15 rack. Use that same markdown strategy or the write down strategy, use that same markup and say, I'm going to write my cost down from $20 to $5 and then retail it for $15 in its discounting phase. You still have the same markup strategy, but now you've taken 15% of the cost as a tax deduction in the year that matters. So we want to accelerate write-offs where we can, but we don't want to push product out unnecessarily when we know that client, like full price products. Yeah.
That absolutely makes sense. I hope some of you're like, poof, I hope your heads explode a little bit when you hear that, because that's so smart. And inventory is not fine wine. It does not get better with age. Like there is no reason to keep all of that boxed up in the back room and wait for next year to sell it, hoping to get full price out of it. Cash is only good if it's in your pocket and it's working for you and you can reinvest it into the next thing. So if it's not working, get it out, reinvest it, and give yourself an opportunity to triple your money rather than let it sit there for a full year and hope you can just get your investment back out of it.
Yeah.
So this is
We
so
don't want
helpful.
you to hang on to it, but we don't want you to sell it at a discount prematurely. You are not saving taxes by doing that. Yeah.
Yeah. Man, Christyne, we have been going on. We could go on for a whole nother hour. I'll save you guys. I want you, if you're listening to this podcast, send me a message at AJ Alderson on Instagram or at the Boutique Hub. And what topic should Christyne come back on the podcast and cover next time? I want to hear from you.
We're talking business A to Z. I could be on here every month.
My God, I know. I need to just be a regular guest. We could cover so many things. No, seriously, you guys, if you love this episode, please send us feedback. You can also, Christyne, what's your Instagram handle?
Christyne Gray. Yep. Easy enough, right?
Yeah. We'll link it up in the show notes, but send us both a message. What would you like to hear from Christyne next time? Because seriously, this is such a critical topic that we could talk about for days and days. But the goal of today was, let's get you guys prepped for tax season and make this your best year yet in terms of tax efficiency and how comfortable you feel and confident you feel with your numbers. Christyne, you made that happen. I appreciate you so much for being here.
I appreciate you. I love getting in front of this community, and we're going to get them all there. Mm-hmm.
We're going to get them all there. I love it. All right. Christyne, thanks for being such a huge part of our community and for being here today.
But thank you.
Hey guys, thanks so much for listening to this week's episode. If you found it helpful, please share it with a friend or feel free to subscribe. And I would always love it if you would leave a rating and review. Hey, if you want more tools, education, and just support, head on over to theboutiquehub.com. Or if you have feedback or episode ideas, DM me personally, AJ Alderson on Instagram. Thanks so much for being here and listening to this week's episode. I'll see you next week.